Hello, and thank you once again for checking out another brief video brought to you by Innovative Wealth Partners and myself, Dan Scharlach. Today we are going to focus our time on 5 key risks that we feel like are important for investors to consider moving into the 2019 and beyond season or time frame in this cycle of our economic events. The first thing that we would bring up is something that you've probably already heard of, but it's interest rates and bond prices. For this conversation, we are going to lump those into one, although they are two different things. We'll start by talking about bond prices. Bond prices are heavily influenced or driven by interest rates. Okay, so if you think about interest rates and the process or the cycle that we have been on since the 1980s, we have a chart that we've referenced below that shows this. However, if you want our 2 cents, they have been on a steady decline, interest rates have, since the 1980s, if you look at a big chart, long picture. And then recently, over the course of the last year or two, they have been increasing. What decreasing rates does to bond prices is basically makes them go up. Okay, so imagine a teeter totter on a playground. We all know what those do. If one side does something, the other side is going to do the opposite. So obviously you know this, but if this pen is our teeter totter and there is a heavier individual here, or there is an economic trend over here, the teeter totter is going to, by law, force the asset on this side to do the opposite. So as interest rates go up or down, that will have a big bearing on bond investors. As we have been on a course over the last 2 years of increasing interest rates, it has created challenges for fixed income investing and bond investing. We feel that that could continue depending on what goes on in the rest of the marketplace. And if that does, we think that that's something that most people aren't really appropriately planning for due to the fact that it hasn't really been something that we've had to think about for roughly 40 years. 1980 to today is a very long time period. It's very easy to get lulled to sleep when you have a similar environment for such an extended period of time. We like to just bring this to investors' attention so that they can be aware of the potential risks. Interest rates are also a denominator or a factor in what's called the cost of money for most financial products. So if you and I go out and buy a financial product, part of what the company that provides that product does is they factor their pricing on their products partially off of interest rates and their future earnings expectations. So that was a mouthful, but just know that if interest rates go up or down, it isn't going to just impact bond prices. It is going to potentially have a much more wide reaching impact than just bond prices. Because again, it is used in almost everything that we touch in the financial world on a day to day basis. The next risk is a fairly obvious one. It would be headline equity or stock market risk. So this is simply the risk that we expose ourselves to in buying stocks or equity securities, equity market like securities. This is a pretty obvious one. This will also be impacted by interest rates. It will also be impacted by a lot of other economic conditions that are in the marketplace. We feel like most people are already cognizant of this risk because they listen to the news and they hear the massive swings or the small swings, I guess, depending on how you look at them, that happen on a day to day basis. But that is a potential risk that we like to see people account for or plan for. And we also like to see people pay keen attention or special attention to trend changes. We're not saying anything big by asking people to pay attention for this, but we would simply state that that would be something to watch for because it can lead us to have a better clue or better understanding about what the future might hold. The third or fourth major risk that we see for consumers or for investors in today's marketplace is foreign currency risk. Not something that we spend a lot of time talking about, but it is something that we feel like could be a silent and subtle, I don't want to overstate it and say drastic impact, but it could have a major impact on our investments if we ever see any sort of change in our currency valuation in relation to other currencies that exist or other baskets of currencies that exist in the marketplace. We go through cycles, obviously, on currencies like we do with most things in the marketplace. And we have been on a very long, steady cycle. And we don't really know or have any idea when this cycle might change. But it's, again, something that we feel like many investors can get lulled to sleep because it's not something that really has impacted us for quite some time, but it certainly could. The last risk, and it's somewhat closely tied to foreign currencies, well, not closely, but it's somewhat tied to that, is inflation risk. Okay, inflation risk is basically the risk that our dollars won't spend in the future like they do today. Some people would argue that that is due to the change in prices. We would argue it's due to that which is caused by an inflating of the currency supply or the amount of currency available to the system. And we feel like all of these risks are major risks that we like to see almost every person account for in their financial life. We don't like to overstate these. However, we feel like a lot of these, maybe even most, but we could say a lot, are not being appropriately accounted for in today's marketplace by the investors who are simply basing their opinions on what they've heard, what they've read, or recent history. And this is basically just something that we created this video to warn against. It's not something that we foresee needing, sometimes not drastic changes, but there are simple and subtle ways that you can tweak certain aspects of your investment philosophy or of your holdings and have somewhat, I don't want to say drastic, but somewhat impactful outcomes on your potential results. So in other words, making some subtle changes, possibly to the stocks that you own, possibly to the duration of the bonds that you own, possibly to some of the hedges that you might own. There are some pretty subtle things that you might be able to do to protect yourself from any of these risks that you might see as a potential problem. We could go on about this probably for hours, but due to time and keeping this video in a consolidated manner, we better leave it here. Please tune in for more information on these risks in the future. We might dial in each one in detail, but for now, thanks for checking out the video. If you have any questions, please reach out to us. Talk to you soon.